Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, September 12th, and we had another big update in the market. Now we had PPI in pre-market, and it actually came in hot, but we did continue to squeeze higher, and I do have a theory on why that is. And if you guys remember, about 2 weeks ago, or really the past few months here, let's go look back, and every time we gapped up and gapped up completely above the implied move, then we pushed in that direction. The same thing happened here where we gapped down, and I don't have the implied move obviously here from back then, but it was completely outside of the implied move. So we gapped down underneath it, and then we squeezed in that direction as options up here got destroyed. So same thing here, we gapped down. This was the entire implied move, and that pushed us down. If you go back to any of these videos, you'll see that it was literally completely gapped over the implied move. So here, gapped up, squeezed. Now, what I think happened for CPI and PPI is that we had such a big move yesterday that today's move was just a squeeze, not from PPI, not because PPI moved it, but because of options. So hopefully that makes sense. Mostly I'm just thinking out loud, and we did open today completely flat in SPY, and the first few candles here you could see were sideways, and then we started to get some momentum, and we pushed up to the very top of the implied move, and we closed just a little bit outside of it, 559.09, and the top of the implied move was 559. So if you did sell 559 bear call spreads here when we got to the top, believe it or not, those would have closed up for you. It wouldn't have been 100%, but it would have been about 35% win. And definitely if you sold 560, 561 spreads, those would have closed up 100%. And I want to take this over to the 5-minute time frame, and I'll probably stay on this time frame doing all of the rest because we did see one thing in common here. So yesterday with CPI, today with PPI, we had a run along the 35 EMA on the 5-minute time frame. So after we dropped yesterday at open, we bounced right here when we filled the gap, and we came back up above the 35 EMA. And then today we basically consolidated back over to the 35 EMA. Once we hit it, we pushed up to the top of the implied move, and we closed at the very top of the implied move here, just a little bit outside of it. And SPX, same thing over here. We saw the open was neutral, and we consolidated back to the 35 EMA. And then right here, about halfway through the day, we bounced right on that 35 EMA, and we took it all the way to the top of the implied move. Now in SPX, the way I had it set up yesterday, we did actually close within the implied move. So 5600 was the top of the implied move, and we closed at 55.9575. So 5600 bear call spreads would have paid today. And it's funny to say that a bear call spread will pay on a bullish day, but it would. And it's one of my absolute favorite trades. And if you learn to do it right, it can be extremely profitable. Of course, buying calls at the top of the implied move was also profitable today, but most days, bear call spreads at the top or a little bit outside of the implied move has been a really lucrative play. And ever since I started including the next day's implied move, that has been a really great target as well. So SPY did close up 0.84%, SPX closed up 0.75%, VIX closed down 3.50%, and SPY we did close just 9 cents outside of the implied move, and SPX did close within the implied move. So then taking it over to QQQ, we saw the same thing over here, where this is where we opened yesterday after seeing CPI, and we dropped, and then we V'd back up and we closed right here. Huge day in QQQ yesterday, and when we opened today, we consolidated back to the 35 EMA on the 5-minute time frame, and we bounced right there. Took it all the way to the top of the implied move. I had 474 as the top of the implied move. We did close within it with 473.22. So today, if you did sell bear call spreads at the top of the implied move, those would have closed up 100% for you. And if you bought calls at the top of the implied move when we opened, those, I don't know how much they would have been up, but that would have been a nice win as well. And I know I talk a lot about bear call spreads and bull put spreads when we drop, but I'm also developing a really cool strategy that has to do with buying premium and hedging with VIX. So stay tuned for that. It's not going to be tonight. There's still a lot I have to work out there, but that is going to be coming in the near future. And QQQ did close up 0.98%. VXN closed down 1.94%. And here we did close within the implied move. And IWM did actually open with a gap up. And the first move was a run to this 211 level. And then we got pushed back down. And look what caught us, the 5-minute 35 EMA. We bounced right there with the rest of the indices, and we came back up to 211, chopped around that level right there, found the 35 EMA on the 5-minute time frame again, ran it all the way up to the top of the 30-day average volatility, and then we actually ended up pulling back from there to close within the implied move. It was absolutely beautiful. So if you sold 212, 213 bear call spreads, those would have paid 100%. And also 213, 214 bear call spreads. When we got up here and tapped the top of the 30-day average volatility, those would have paid 100% as well. And if you did trade today by buying calls at the top of any one of these, and if you could give me any clue as to what that paid, that definitely looks like it could have been a pretty nice trade as well. And DIA, hold on, IWM, I didn't go over. The IWM closed up 1.29%, so this is the biggest winner of the day. RVX closed down 2.24%, and we did close within the implied move today. And now, lastly, DIA. DIA also opened slightly up, and it's a little bit hard to see, but we did have a wick that goes up to right here before coming back down and bouncing right on that 35 EMA on the 5-minute time frame. So look at that. Yesterday we opened right here with that gap down, and then we dropped to fill that island gap right there. We had a bull gap and a bear gap, and we closed that out, just leaving the bull gap right here. And then we bounced back up, and look at, once we got above that 35 EMA, this is on the 5-minute time frame, it has stayed as our support as we pushed higher today. So DIA did bounce a few times before taking it up almost to the top of the implied move for the week. And remember, DIA only has weekly contracts, and so I do a reading of the implied move for the entire week at the very beginning of the week, basically over the weekend video. And I may actually start doing that with all the others, maybe not adding the entire thing, but maybe just marking where the implied move on the week is. Something to maybe look forward to in the future. And we made it all the way to almost to the top of that implied move. So we're at 411.97. Let's just call that 412. And the top of the implied move for the week is 413. So just remember that most of the time we do close within the implied move. Of course, we close outside of it all the time, but probability-wise, we may be towards the end of this rally for the week. Top of the implied move is really close, and just my opinion, 413 might be a good place to sell. All right, so wild week, CPI and PPI never ceases to amaze me, the moves we see on those 2 days. And we do have FOMC next week, and I'm really not sure why I'm mentioning that right now. Maybe just to put that in your awareness that that is coming up next week. But enough about today. We've got one more day to close the week, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. And if you want to support my channel, you can do so financially by hitting that thank you button, or share a link to my channel everywhere you know that traders are hanging out. Alright, so starting in SPY, tomorrow's implied move is between 555 and 563, and that is from options. The 30-day average volatility is 552 to 566, and the implied move on Monday's contract is between 553 and 545, and to the upside we have two bear gaps, and they are, the one right above us is the bear gap from when we opened September with that big down gap and that big drop. So not from this Monday, but the previous Monday. And right above that, we have this little bear gap. And that goes back to when we made all-time highs right here in July. So we made all-time highs, the next day we gapped down. And then when we came back to that in August, right here, you could see we were chipping into it, tried to get further and further. And then we closed the month of August right here, and then we gapped down with that September gap. So we have two separate bear gaps. Last time we know for sure bears were hanging out in this gap, and there's a little bit of that gap left that is just above the two implied moves. And then the September gap right here, the one we started the month with, that starts with the bottom of that gap about halfway up the implied move at 561, and the top of that is at 564. So definitely pay attention to that, know that is there. And then to the downside, we do have the 30-minute 200 moving average. It is pointing down. That momentum definitely could pull us down. And then the 35 EMA, it is underneath the implied move for the next 2 days. And not so long ago, we had another day where the implied move was above the 35 EMA. Or let me put it the right way, the 35 EMA was underneath the implied move, and the first day, it didn't pull back towards it. But then the second day, the 35 EMA was also underneath the implied move, and we did pull back. So very often, if it is underneath it, we do pull back towards it. And you can see why. It's like a magnet. When we trade too far away from it, we just get pulled back to that level. So we drop, then we pull back, and we drop, pull back. Same thing on the upside. When we go up, we pull back to that 35 EMA. And tomorrow, to close the week, it's going to be the second day back-to-back that we open with that 35 EMA underneath the implied move. And not only that, it's underneath the entire trading range, the 30-day average volatility as well. And taking a look at this time frame, the 30-minute 200 moving average and the 35 EMA, if we hide the price for a minute, just take that out completely and just look at the moving averages, we are still bearish because this 35 EMA is underneath the 30-minute 200 moving average. So as this 35 EMA is coming up to the 30-minute 200 moving average, what you want to look for is, do we see signs of a rejection there with the moving average, or do we cross back up and go bullish again on this time frame? So also keep an eye on that, and if you're not used to doing that, it can be a foreign concept, but it definitely can give you a lot of clues on price direction. And then underneath that, bottom of the implied move is 555, 553 on Monday's contract, and then 50-day moving average is underneath all of that to catch us if we do drop. And I have been getting a lot of requests to kind of go over what I would do and how to play the trading ranges, so I've been trying to throw that in there. So if we do come up and into this bear gap and we get near the 563 strike, then what I would do on tomorrow's contract is sell 545 bear call spreads. Same thing to the downside. If we drop, if we get to 555, then I'm going to be looking to sell 553. And then SPX, the implied move here tomorrow is between 55.55 and 56.35, and that is from options. The 30-day average volatility 55.25 to 56.60. The implied move on Monday's contract 55.40 to 56.50, and to the upside, same thing over here. Our first level to look for is going to be this gap. This is the down gap, not from this Monday, but from last Monday. This Monday we gapped up right here. Last Monday we gapped down, and we came all the way back up to the bottom of that gap. So basically right where we opened last week. Bottom of that gap is at 56.15. Top of that gap is 56.48. I would round that up to 56.50. And then the top of the implied move for tomorrow from options is 56.35. That is in the middle of that down gap. And then above that, we have the other down gap just underneath all-time highs. So that down gap happened back here in July. This is when we made all-time highs. We had a little rally after the 4th of July, came up, and then July 17th, we gapped down. And then August, when we came back up to that level, you could see very clearly that was a very strong resistance level. The bears were not messing around, and after about 2 weeks of struggle, we dropped down. So now we're back just underneath that, and they added another gap. So that is the top of tomorrow's trading range. My game plan tomorrow is the same as every day. If we do come up near the top of the implied move, I'm going to look to the next day's strike. And sometimes I don't even look to that next day's strike. If I feel like we might see a good rejection here, then I might just go one strike above that. And because of where the top of the implied move falls, which is within this bear gap, I would consider 56.35 or 56.40 as my target strike. And then to the downside, 30-minute 200 moving average, 35 EMA underneath the implied move. So that signals very often, I'd say about 85% of the time, that signals a flat or a down day. And keep an eye out tomorrow to see if this 35 EMA does cross back up. That would be a bearish signal. That would give a little bit of support to the bulls. Sorry, I think I said bearish, but that's a bullish signal. And underneath all of that, we have the 50-day moving average and the 1 hour 200 moving average. This right here too, the angle of the 1 hour coming up onto the 50-day moving average, this would also be a bullish signal. So that is looking into next week. So we've got a little bit of upward momentum underneath the trading range, and then within the trading range tomorrow, we do have a lot of bear gaps just underneath those all-time highs. And then QQQ, the implied move over here for tomorrow is between 468 and 478, $10 wide range, and that is from options. 30-day average volatility 465 to 481, and on Monday's contract 466 to 480. And to the upside, we are right at the down gap from 2 weeks ago. So not this Monday, but the Monday before, we gapped down, and then we gapped up this Monday. Right here, we have a little bit of that gap left open, and then 474. I'm going to zoom out to show that level because we've seen a lot of action at this level. It was a support here, a support here, and just to show the time frame, this was June 24th right here, support, then July 19th right here, support, or at least we had a technical bounce there. We came back up, and then when we gapped down from that technical bounce, we gapped underneath 474. We dropped, came back up, we saw that as resistance, dropped really hard, came back up, and then there was definitely a struggle here around 474. We dropped, another bounce on the weekly 35 EMA brings us all the way back up to 474. So important level, we did fill the bear gap just underneath that 474 level, and then this part of the bear gap is still open. Top of that gap, 476.51. Round that however you need. I would call it 477. 478 is the top of the implied move. 480 is the top of the implied move on Monday's contract. And then to the downside, we have the 50-day moving average that is pointing down. The momentum on that is supporting the bears here. We have the 1 hour, what is that? This is the 30-minute 200 moving average right here. I don't know why I'm on the 1 hour. Oh, because I zoomed out to 474. Okay, so underneath that 30-minute 200 moving average right here, bottom of the implied move is between those two levels at 468. 466 is the bottom of the implied move on Monday's contract. And then underneath all of that, we do have some upward momentum. We have the 1 hour and the 4 hour 200 moving average. Those definitely could team up, even though I do personally think we'll see a little bit of downside here with these. We could find support just underneath that on the 4 hour and the 1 hour. So super interesting trading range over here. And IWM. IWM has volatility just under 25, which is absolutely my favorite. And the implied move for tomorrow here is between 209 and 215, and that is from options. 30-day average volatility 207 to 216, and Monday's contract is 208 to 215. And to the upside, we have the 50-day moving average. Really big level, and 215 is the top of the implied move, with the 30-minute 200 moving average pointing down right at that level. Top of the implied move on Monday's contract is also 215, which makes me believe I made a mistake here. Yep, this one's 214. So top of the implied move for IWM is 214 and 215 on Monday's contract. And then just underneath us, the 1 hour 200 moving average, right through the middle of the trading range. 35 EMA is actually not underneath the implied move. It is going right through the middle. I don't believe that in QQQ I mentioned the 35 EMA, so I'll go back in just a second. And bottom of the implied move in IWM 209, and then we have the 4 hour 200 moving average here underneath all of that. So again, tomorrow, if we do drop tomorrow to 209, and if we maybe find ourselves in this area in between, then I would maybe look to 208 to sell 208 bull put spreads. You have the support of the 4 hour 200 moving average right there. And then the same thing over here. If we get up to 214 or anywhere near here, maybe a little bit above that 30-minute 200 moving average, then I would sell either 214 or 215. Maybe just move it up to that 215, be a little bit safer. And then you have the support of that downward 30-minute 200 moving average. The more I analyze IWM, the more I look to RUT as a possibility. I don't trade RUT right now. I basically just trade SPX, but I know that I would have a blast trading small caps right now. The moves have been amazing. And DIA. This is our oddball because we only have weekly contracts here. So at the very beginning of the week on Sunday, I do a reading for the implied move for the entire week. And that is between 396 to 413. And then we do have the implied move on tomorrow's contract, which tomorrow, Friday, is the only days that it's 0 DTE. All the others, we clearly have 0 DTE every day, but in DIA, it's just Fridays, and the implied move overlaps the weekly implied move, so this 413 is going to be a resistance level. And if we get above that, 415 is the top of the implied move, and it lands us right here, right where we gapped down 2 weeks ago. So 2 weeks ago, down gap. This Monday, up gap, and that was Monday as well. So Monday down gap 2 weeks ago, Monday this week up gap. And the top of the implied move for tomorrow does take us right into that gap. I'm willing to bet we close under 413. And fingers crossed, because I want to brag about that. I'm just kidding, but 413 is definitely going to be a level. And there you have it, guys. Everything that you need. I did say I'm going to go back to QQQ and look at that 35 EMA. So the 35 EMA here is underneath the implied move and underneath the 30-day average volatility. So I am willing to bet, because 2 days in a row of that we do pull back to that level. So there you have it, guys. Have fun tomorrow. Trade safe. Make sure you take profits when you're up, and I will see you guys on Sunday night. Good luck out there.